story time.
It's story time.
And I said, Kyle, what the hell did you say, or what lie did you tell to Steve Ehrlich to get him to give you $700 million?
Running their business, thinking to themselves, this is a Ponzi scheme.
And I believe him.
I could believe it. Craziness in the U.S. bankruptcy system that has got to be addressed by someone, you know? It's crazy. Cypherpunks, right? Like
2022 was the year of crypto contagion. One of the biggest platform explosions, of course, was Celsius. And nobody knows more about what was going on inside Celsius than Jason Stone. Some have called him a whistleblower, but his company KeyFi was acquired, and then he eventually left because he saw all of the bad behavior that was happening within the company. We share quite a bit in this story about the inner workings of Celsius and these platforms, what was being done wrong, what was maybe being done illegally. You do not want to miss this story.
Let's go.
I feel like this is going to be the easiest podcast ever because it's story time, right?
It's story time.
You effectively have an incredible story to tell, and that's what you're going to share. So I think we can start maybe not all the way at the beginning, like birth and bar mitzvah if you had one or something. But
I did.
Obviously, you had a pretty contentious relationship with Celsius, so we should probably start from the beginning and then work our way up to where it's at now.
Yeah. So Celsius acquired my staking as a service company back in, or the transaction was supposed to occur back in mid-2020. We kind of joined the Celsius team. And by August 2020, we were starting the OXB1 account, which people kind of came to know as one of the largest DeFi yield farmers in Ethereum at the time. You know, as things evolved over the next 6 months from there, I kind of uncovered a lot of what the federal examiner uncovered recently and what a lot of people have been saying relating to, you know, the fraud, or not just the fraud, the unknown unknowns that were going on at that company, right? And the different kind of segments of executives trying to do different things with the company, with their own money, with the company's money, et cetera. So after I kind of uncovered this and, you know, clearly saw that I was, you know, being lied to and that things didn't make any sense, nothing added up, I kind of made my stand. I said, I don't want to be involved anymore. And I took a step back in March 2021. A year and a half later, they ended up going bankrupt. And, you know, there was this, you know, massive disagreement as to, you know, what our original contract said, what really happened, what should have been paid to who. And that kind of finds us where we are today, which is we have an adversarial proceeding going on within the global Celsius bankruptcy. So, yeah, that's kind of where we're at. We ended up signing a litigation stay recently in the hopes to settle, because for the most part, the monies that KeyFi still has are mostly in NFTs that, you know, the estate says is theirs, we say is ours, but at the end of the day, it's such a small amount of money that we've actually, Celsius has already spent almost more money than the actual dispute is over, right? And it kind of, in the last few months, I've really seen this craziness in the U.S. bankruptcy system that has got to be addressed by someone, you know? It's like we have this bankruptcy system so that U.S. citizens or creditors that are U.S. citizens of bankrupt companies can be taken care of, right? But then we have this situation where so many of them have happened so quickly, and you really just see these law firms charging exorbitant fees and, you know, making the estates so much smaller day in and day out. Like, there have been these crazy like emails. We'll ask to liquidate some almost worthless NFTs, and then the lawyers on the estate side end up charging 10 times the amount of money just in emails back and forth to determine if we can sell those NFTs, then the NFTs that are considering to be sold are worth, you know? And that's just like negative EV for everyone except for big law, right? And what I realized in this process is something kind of incredible. It's not just the bankruptcy system or / the creditors that are that are hurting because of this, right? It's actually the taxpayer, right? Because the bankruptcy system is run by the Department of Justice, right? You have lawyers, judges, clerks, the U.S. trustee, the FBI. You have all these organizations that the taxpayer is actually paying for, right? It's not just the estates that are being charged money by lawyers for legal fees on the side of trying to get back money. It's also the American people. So I look at this and I'm like, we've seen so much blow up and anger around how SVB was run and how all of these systems and services that are run are not really in the benefit of the people, right? And I just feel like this is a prime example of inefficiencies or wrongdoing as a function of how our government doesn't catch things, right? They set up these law firms to be in charge of these estates, be in charge of these bankruptcy processes, but the incentives are not aligned, right? The longer that these processes go on, the more that lawyers get to charge, and the more it costs the U.S. taxpayer with all these different organizations that are being charged money. So it's kind of crazy, and I really worry that not just with my situation, but with creditors globally on all of these different bankruptcies that have happened over the last year. Where's the end? Where's the end for everyone?
I mean, I'm a Voayger creditor. I think everybody who listens to the podcast knows that. And looking back in hindsight, they'd simply just liquidated the day that they declared bankruptcy. Instead of declaring bankruptcy, we've gotten 75 cents on the dollar, something roughly like that. Every single day that passes, they're spending, tens of $millions a month on advisors, lawyers, as you said, a failed FTX deal that was poorly vetted, a potentially failed Binance US deal, each delaying the payback, each, as you said, costing creditors. We're who pay for it. We're literally paying those lawyers for every one of those emails out of our balance, right? And the taxpayers, as you said, it's an absurd, fraudulent process itself that never ends well for the creditors. I mean, it's really disgusting now, having gone through it, how long it takes, how much it's milked, and what the result is. And the part you didn't mention, the only reason that these companies largely are filing Chapter 11 is to protect the executives.
Yeah.
Like Voyager decided, I'm sorry, I'm not putting my tin hat on, but Voyager decided bankruptcy was better than liquidation because Steve Ehrlich and his friends didn't want to go to jail.
But does that really protect them from jail? Does it?
Yeah. Yes. Part of the proceedings here have been largely to them to avoid the problems that they could have had. I mean, it's pretty, it's part of the negotiation and the process. I mean, you're deep in the weeds of Celsius. Do you think Mashinsky gets in trouble at the end of this?
Absolutely. But I also I've seen that there are two completely separate processes, right? One of them is the bankruptcy system, the Department of Justice, running through the bankruptcy court. And then separately, if there was criminal fraud, then that's a different arm of the government, right? That's building a case or might be building a case against him or other executives. So, and I do actually see why there is a separation of these things, right?
Oh, yeah.
On one hand, like it's, if there was, criminal action taken and needs to be accounted for, then a certain organization or a certain three-letter agency goes after those people to hold them accountable. And then that does have an effect on the bankruptcy process, but isn't like directly part of it, right? So it's almost, you have to wonder if in certain cases they should be, I don't know what that would look like, but they should be kind of merged together. It's hard, right? But we do live in a free society, and we do, have, freedom of choice and will, or
yeah. And the added wrinkle obviously is that then sort of the SEC or the regulators get involved and start to declare the assets that are involved in the bankruptcy as potentially securities and not securities, and hold up the process further. So while they are vague and refuse to make a decision, the process goes on, and creditors and taxpayers pay more money. It really feels fraudulent, like a fraudulent process, having gone through it.
Yeah, no, 100%. And, I think that actually, hopefully, that the last year's kind of sequential bankruptcies and at the speed at which they happen and the number of people affected will actually spark some type of anger in Congress or something around how the business of big law relative to what's best for creditors and like the U.S. taxpayer. Hopefully that starts to come into perspective, because it seems like our government has created a system, or not our government currently, but history has created a system where almost like we want answers at the expense of people's benefits, right?
That's exactly right.
Yeah, they'll spend all of people's money in order to get answers that won't make a difference, but that money could have made a difference to the pocket of each individual person. And
they should liquidate. As you talked about the process earlier, so what they should do is just liquidate and then litigate, right? I mean, give everybody their money back first, and then sort out the rest. But the problem is, then who's going to pay for it?
Right. No, it really is crazy. But I think that the anger, that the thing that strikes a chord with me is like, it's one thing where creditors get charged for the bankruptcy process, right? That's where the money comes from now. But then people aren't thinking about the other side and the fact that there is another side, right? And it is our government, and we are the people that end up paying for that out of our taxes. So the longer that these things go on, the more, the greater cost is borne by the taxpayer and by each of us individually as creditors, or by, individuals as part of this process. It's just crazy. And I wish that, you can't conflate different types of situations, but there's such visceral anger around different types of things these days, whether it's, banking run awry, whether it's the way that trans rights are addressed by different, Congress people, right? There are these things that are these fiery moments that people get super animated about. And you have to think about, like, this is a huge group of people that's been affected, right? It's not just Celsius, not just Voayger, not just FTX. It's all of the people, probably millions of people in the US who have been affected by these crypto bankruptcies. And it just, to me, I think it's kind of shown us so many negatives and inefficiencies in our processes, but no one seems to be doing anything about it. I'm not sure what can be done about it, to be honest. I'm just sitting here, as kind of a part of the process, but
yeah, same. Same. But there's people smarter than us who are much more knowledgeable of the process, who could certainly figure out ways that you and I don't pay for these court cases indefinitely, when we're already down and out and have lost money and know that we're only getting a small percentage of our assets back. So
yeah. And it's really sad. I wish there was like a oversight on how the law firms work, but then that's just another cost, and it's like, where does it end?
But did you guys get paid when they bought you out?
No, sorry, excuse me. They paid us $65,000 for the assets that the technology assets that we had, but it was supposed to basically be an earnout where we would make a percentage of profit based on the profits that we made for the business. And they said that they were hedging, but they said that they were hedging their entire business, which now we all know from the Federal Examiner that they weren't. So there weren't any profits to be had. So basically we didn't get paid. We just got screwed. And I didn't have major deposits at Celsius, but what I had built out as my business, unfortunately, we didn't get anything out of. They were supposed to pay us a bunch of Cell token, which we never got, but obviously that would have been worthless anyway. So, it's a crazy merry-go-round, it really is.
Okay, so let's dig more into the weeds of the story then. While you were at Celsius, what was the behavior that you identified that was bad, in as much as you can talk about it? What, raised your red flags? What kind of got you panicked? What caused you to leave? Because as you said, you built this company, you sold it to them, and then you bailed. It must have been pretty bad.
Yeah. The first trigger was this situation where executives would basically lie to one another, I'll call it, and just tell each other things to induce other executives to like do what Mashinsky wanted, right? So there was this ethos at the beginning of, we can only do DeFi with international customer deposits. So at first it was, okay, Jason, you're only touching international customer deposits. Then it was, we don't actually have a separation of international versus US domestic customer deposits. We set up other entities that'll make this okay. And I just saw like one executive telling another that like things were going to happen. So like, let's just do it now. And that type of, behavior when you're dealing with hundreds of millions or billions of dollars is just absolutely not okay, right? Because you're basically just passing the buck onto someone else or some situation that doesn't exist. So that kind of came up, and I was scared myself because I was the one actually deploying these assets, and I was like, well, what is or isn't legal? It was almost like a kid in a candy store. I saw a shiny object, and they were like, go and do this DeFi stuff. And they said that everything was regulatorily compliant at the beginning, and that kind of story started breaking down. So, then I started asking more questions. The answers got hairier and hairier, and then kind of we ended in the place that we did. Another thing was just, I know that a lot of Slack messages have come out in terms of like internally what people were saying about Cell Token and, what the internal company or the internal people believed about Cell Token versus external people. And, that's just like a microcosm of the true problem. I mean, one time I think it was January on Slack, one of the like deployment execution guys told me that, Alex had told him to just start buying Cell Token the year before I got there, and spent like $80 million of customer Bitcoin on Cell Token and there weren't questions asked about why that was, right? But and now in retrospect, we all understand it was to boost the price, to continue the flywheel of, them selling tokens at higher prices or borrowing against Cell Token, whatever it was. But that stuff just like jumped out at me. And even in the microcosm I was in, I was like, this can't be right. So
that's a Ponzi scheme.
So I don't.
Okay, it's not. It's an iteration of a Ponzi scheme.
Correct. I don't think that like they were running their business thinking to themselves, this is a Ponzi scheme. And there's a difference between that and Madoff, because
he
Madoff,
was totally intentional, of course.
Totally intentional, right? And maybe intentions at the end of the day don't matter, right? But from the perspective of what I saw when I was there, they definitely did not believe that they were operating any type of Ponzi scheme, because they were looking at it like a startup, and they were looking at it like, we need to do this to then make the probability of our success greater. And that is a reasonable, in a complete vacuum, that idea isn't bad. But when you're dealing as a bank, right, or as some type of investment firm, you can't, gamble your own equity against your customers' assets, right? So it's just
I just don't think customers had any idea that their funds were being aggressively traded at a hedge fund, effectively, A, at a hedge fund, but B, to buy the assets of the very company that they were banking themselves with. And then you get into, obviously, the entire marketing scheme of Celsius, which I also, fell hook, line, and sinker for. I had Mashinsky on my podcast and listened to him explain how they made money and how JP Morgan lends securities. He didn't say anything about going deep into DeFi, I'll tell you that. But, I mean, unbank yourself, right? I mean, I think the biggest problem here was transparency. Right. Yeah. I mean, it's just, I think that the majority of customers of Celsius worldwide and FTX and BlockFi believe that they were depositing their money into a bank to earn interest, and didn't understand that they were actually putting in the hands of effectively a bunch of degenerates who are willing to go way down the risk curve to make sure they could continue to offer those huge yields. I mean, listen, I've told the story, but I'll briefly tell it again. You and I met in Dubai, right? Well, I went off site for about 2 hours for an unplanned meeting with Three Arrows Capital. But I know a lot of people that were there did those as well. I crashed it. It wasn't a meeting with me. Because I'm a Voayger creditor. And I had one question. I walked in, Kyle saw me. He kind of gave a wince, because I've obviously been critical of them. And I said, Kyle, what the hell did you say, or what lie did you tell to Steve Ehrlich to get him to give you $700 million with no collateral? And he laughed. He said, Scott, I swear to you. He's like, I've done a lot of things. We blew up. I swear to you, Steve Ehrlich came to us and said, please take this $700 million. I need to put it to work. I believe him. And I believe him. And then I said, so what balance sheet, what P&L did you send? He was like, he asked us for nothing. He came to us and said, listen, I have $700 million. I need to pass on, 7, 8, 9% yields to my customers. This money has to be put to work to do that. Take it. Yikes. So coming back to the transparency and disclosures, if an email went out to all Voayger customers and said, today, Voayger decided to give an unsecured loan to Three Arrows Capital Fund at $700 million, a lot of people would have withdrawn their money and that would have been their choice.
It's crazy.
Is that the same kind of behavior you were seeing at Celsius? It seems like they were more focused on utilizing customer deposits to basically recycle into Celsius token, which raised the price of Celsius token, which allowed them to pay more rewards, which allowed them to take bigger loans. I mean, I know that they were in Anchor, like a week before the Luna blow up.
Right. It's an interesting parallel that you draw there between the mindset of the Voayger execs versus Celsius execs. And the honest answer is I don't know, but I think it's interesting to consider, the types of people that were running these businesses, right? What they were actually believing themselves at the time they were doing these things. Like in the Voayger example, just not being very familiar with it, just based on what you said, it's almost like it's almost like a startup executive who raised all this money, who instead of trying to build a business that he knows won't work, should just give back the money, right? But being somehow stopping themselves from making that mental jump that's the right move, right?
I agree. I don't know that they were like criminal in mentality at the time, any of them. I think that they were a victim of their own success to some degree. Because I mean, I can speak to Voayger, but I remember kind of when that Dogecoin boom happened. Yeah, and Mark Cuban was, I guess an investor, a supporter of Voayger, and then the Mavericks took Doge, and they had millions of people sign up who just basically wanted to trade Dogecoin. They weren't ready for that. Took 3 months to onboard people, but now you have 1 million more customers than you were prepared for, or whatever the number is, and you need to give them yield, right? So basically, the speed and velocity with which these platforms scaled because of the bull run, I think sent them just way further down the risk curve to not lose those customers. Because if you said one day, listen, we can't get the yield, it's going to be 1%, right? And BlockFi actually at one point did drop their rates almost, I think, to that level. Then people would have left. And I guess they probably feared losing their customers. Not an excuse, certainly.
Yeah. It's interesting because it's almost like building a business expecting the bull run, right? Or the continued, and this goes not just to crypto, but to the larger like macroeconomic world where we've built a system of credit on credit, right? And if the right levers aren't in place or the right controls aren't in place to manage that on the risk side and the kind of emotional mentality side, really bad things can happen, right? When the economy isn't continuing just to boom and go up. And everyone knows we go through boom and bust cycles, right? So you can't build a business on the theory of hope, right?
The expectation of the never-ending bull market, right? That's what they were building their business on, right? That none of this stuff can ever go down, sure. And if it does, not being cognizant of the fact that they'd be completely screwed if it did. I mean, what else did you see there that was of great concern? I mean, I guess we should give some context too. You said that you're sort of in internal litigation with them. In that capacity, I mean, to a degree, you've become, I guess, an informant against Celsius, correct? I mean, is that the proper vernacular for it?
I would, maybe the word that you're looking for there is whistleblower. I have had conversations with agencies in our government that are confidential, relating to their looking at this company and the people that work there. And I do personally think that at some point they will, file charges like they have against FTX executives. And it actually really interests me as to why, like what order those things happen in, and like why it takes in some cases many years to build a case against one executive at one place, but much less at the other. Does it have to do with, political motivations, or is there like a reason? Is it harder to get information on one of them? I honestly don't know, and I guess we'll never know. But it's hard.
I hate to tin hat, but I mean, SBF was the guy meeting with Gensler and meeting with Maxine Waters and sitting with the politicians. I think they had to act fast. against him, right? So I think that he just was first by sheer virtue of the embarrassment and egg on the face of politicians who had sort of been involved or meeting with him and stuff. And the rest probably, I think probably if Mashinsky or executives at Celsius to some capacity end up in trouble, that's probably more reflective of the normal process. I think SBF got fast tracked.
Yeah, probably. And honestly, like the Congress and our government is so in a vacuum, right? They're dealing with something that's brand new, and they don't like have internal staffers who are necessarily experts on these things, right? So they have to like get up to speed, and they're being told that they need to make a decision on something that they fundamentally are just learning about at the time that they're being told to make a decision on it. I don't know how much. I'm not like going to place blame on Congress people or senators for being swindled by some of what other people are saying are the smartest people in the world.
I had Sam Bankman on this show like 7 times. You know what I mean? Probably we all thought. Listen,
we all want to believe in the people that we look up to, right? At the end of the day, as successful at the time that they are. And that's really difficult. It's a difficult thing to internalize.
I mean, you would know better than me. Maybe Celsius is just a more tangled web in trying to figure out exactly what they did, because what you described is less outright, I think, than holy crap, like the funds were being sent to Alameda instead of FTX from customer deposits.
Yeah.
And I think maybe it was just more outright fraud, and there's no way to explain, $7, $8, $9 billion going missing in that context. But I don't know. You're right. It's a tough, I don't understand exactly. Maybe we gotta get a lawyer. Yeah.
Which also costs more money, right?
So where do you stand now? So then where does your process stand now with Celsius, and where do they stand in their bankruptcy proceedings? I've seen that of late there's a lot more bidders and a lot more interest. Some Michael Arrington was forming a company to potentially.
I saw that too. And honestly, I haven't been following the main bankruptcy process like on a day-to-day basis. From what I've heard, there was this Nova Wolf bid that was going to be the only bid, and then at the last minute, these 2 other bidders came in, which I guess is good for all creditors or people related to the estate. The more people that want the assets, hopefully the price will go up. Right? That's what an auction is. In my process, we're arguing over depending on what NFTs are worth at a given time, like $4 million worth of assets, $5 million worth of assets. The judge has allowed us to continue, and this is another dichotomy. Like it's really I have a lot of respect for the judge and like the FBI, the government, in terms of them taking the time to look at NFT DeFi and say, okay, until we figure out who really owns these assets, we're going to allow KeyFi, which is the company that Celsius acquired, where the NFTs are held, still continue to farm and do, relatively delta neutral yield farming with these assets to earn interest while we figure out
it's interesting. I didn't know that.
Who actually owns these. At the same time, you have these situations where they're letting us do that, but then they're not taking action on the other side, which is crazy to me. But long story short, where we are is we're in this litigation stay, which we've signed in the hopes to settle and basically sit down and say, this is what happened to all the assets. This is where they all went. This was the impermanent loss. This were the profits on dollar basis, coin basis, et cetera. And then hopefully some type of asset exchange, and then walk away. But it's since we signed that, it seems like the lawyers, at least on the Celsius side, not the committee side, but the Celsius side, have done everything they can to throw wrenches into the settlement process, because I really believe that they don't want this to settle, right? Because they won't be continuing to charge fees if this settles. So they've already charged, to my knowledge, I think more than $4.5 million just on fighting me, and we haven't gone to litigation yet. And the total amount that we're arguing over is about that amount. So it's what? And it's
insane.
It's insane. Yeah. But, I'm a small piece of the, global Celsius story. And I honestly wish I could have. They were threatening me after I left, and they had me followed for a while. I was truly fearing for my safety. I wanted to kind of come out and say, hey, I didn't know what avenue or format to come out at, because I was hoping that they would honor their agreement, even though I left. They ended up not doing that. But regardless, they were like threatening me, and I was scared. They were doing sketchy things. I didn't know what they could do.
Can you dig more into? Let's talk more about that. I mean, they literally were following you like with the intention. I mean, I guess you don't know what their intention was, but because they were trying to like get something on you that if in the future.
I'm not sure. I'm honestly not sure, but I know that it happened for about the 8 weeks after I initially left. They were having me followed, I think, because at the time, because their internal process and controls were so out of whack, at first they were accusing me of stealing $400 million. I was like, guys, you wouldn't be able to find me if I stole $400 million.
I remember that they, right. So you basically came out, then they counter accused you of something, right? I mean, isn't that kind of
right? But this is a year before all those lawsuits. So this is just like, so if you go back to the year before, they were actually just in their mind thinking that okay, he somehow stole $400 million from us, so we're going to make sure that he doesn't like leave the country or something. Meanwhile, a year later, once we actually went to court, they were like, oh yeah, impermanent loss was that loss. He didn't actually steal that money. It's like it's just making decisions based on bad information, which I think is a lot of what all of this comes down to, right? Is the bull market going to be forever? What's going to happen tomorrow? Like, who are these people, right? It's all just, bad information, and decisions are being made based on that. And then we end up in these situations, It's crazy.
So many crazy stories. I'm trying to remember, like, surrounding Celsius at the time. Wasn't one of them, and I don't know if this was true or not, that like one of the people managing hundreds of millions of dollars was like a 21-year-old girl or a 23-year-old girl or something like that?
That was even before I got there. So that had like stopped by the time I got there. And but she actually had some finance experience. There were other people that were like 21, 22, 23 who had like just out of college, not even finance majors, who they were just like, oh, here's $100 million, go deploy it on Curve Finance. What? Like what? Just it's really crazy to see. It's really crazy to see what's happened.
I mean, your personal litigation is nuts, and then you extrapolate that to the size of the entire thing. I mean, feels like this just takes years to resolve.
It's really sad, but I wish it wouldn't. I think everyone wishes that. I don't know. Yeah, maybe it just does take years. Maybe that's just the world that we live in. I don't know.
So, what are you working on now?
Now I've actually turned some of my learnings from the DeFi world into some theories about how our, I guess, society works in terms of what people need, in terms of liquidity, how they live their lives. I think that what interests me the most these days is like, I guess, institutional DeFi or real world assets on DeFi. I think that there's a lot of lessons and notions that we can learn from how people operate in DeFi. Actually, you know what a really interesting fact is to me? The fact that like the most profitable like people on chain, I think there was this article a couple weeks ago, were basically the liquidators on Aave and Compound in like the DeFi summer days, like late 2020, early 2021. And that's because they were basically serving this actual need, which was buyer of last resort, right? If someone is borrowing money against some illiquid asset, then it's the liquidator who actually, safely makes money. But I think that, and while that might sound weird, I think it's actually a good thing, or it's a good model to live by, right? People have a lot of their wealth in paper equity, in collectibles, in things that are relatively illiquid, and being able to borrow against them, if there is a buyer of last resort, I think is a good thing. But it doesn't have to just be with crypto coins, right? It should be with any asset that some other group of people in the world attributes value to, that you actually can that you can find a borrower that is willing to lend against, right? So even if you're paying a high interest rate, people have their stuff, they like their stuff, but they don't necessarily want to sell it, and they should be able to live their lives based on their total global wealth as opposed to just kind of their banking level wealth. And I think that is like one of the most interesting areas to me. And I think what that means is real world asset NFTs, and that can mean a lot of different things, but it's basically, creating rails for real world assets to gain liquidity through on-chain mechanisms. I think that, and people say like NFTs are dead and all this stuff, and I think that they're talking about JPEGs and this whole
PFP. Yeah, they're
world
talking
of
about
like
PFPs. Come on, that's not what NFTs are about.
Exactly, it's about technology, right? And I think that that's kind of where the natural evolution of this show goes. It's using that technology for.
Yeah, I talked to Sid from Maple Finance recently, and I mean that's kind of their I guess main goal is either tokenizing assets, but more just making real world assets available for lending, within DeFi, and it's a huge addressable market, literally endless. Imagine if you had one single platform where you could basically manage everything you own in your entire life digitally. Right. It's incredible. But listen, I mean, I think the lost part of this story is that you quickly built an incredible platform that was worth buying for Celsius.
I wouldn't say it was quickly. It took 2 years, but
that's quickly, not quickly for crypto, maybe, but that's quickly in the real world.
Yeah. No, I mean, it was a technology that was specifically focused on making staking easier and getting the best yields out of the proof of stake version 1, which was not even what DeFi is today. It was the Qdoms, the Horizons, the Dashes of the world, right? But just the idea that grouping coins together would, generate greater yield, doing that in a non-custodial fashion, at least Celsius ideally wanted that, and that was the crazy dichotomy of it, right? They wanted to be this decentralized, honorable entity, and ended up figuring out that the only way that they could get there was to do it the opposite way. I don't know. It really is something else, man.
But so, I mean, you've got these ideas. Have you started building anything yet, or are you just sort of waiting to see what fleshes out with Celsius first?
No, I actually have started. I've started building a company with a friend of mine, not necessarily in blockchain space. I think it's more of a Web2 company, but it basically is trying to apply these DeFi ideals to the real world, which is how do you match buyer of last resort with and then lender and lender with borrower, right? And doing that for things that are not the most like commonly thought of, assets that you can borrow against, right? Whether it be high-end collectibles, sports cards, high-end art, startup equity. I think that we need universal rails around those things, and hopefully we can build a company that can service those needs. Because I think that, it also goes to this other point of like, how do you align interests, right? Like people, like Peter Thiel always says, people should go and build a startup, right? Because they get way more for the value of their time out of doing a startup than doing a corporate job, right? But at the same time, then you get into these situations where these really successful entrepreneurs build something for a long time and then aren't able to get liquidity because it's just not the path for their company that they expected, right? Whether it stays private or they can sell secondaries at a big discount, but then they're not as incentivized to see the company's continued success, right? If you created a market that was better versed around lending as opposed to sale, and those entrepreneurs and founders were still like incentivized, or the value gain is still directly correlated to the success of their business, then you create a much more fluid process for keeping these bright minds continuing to disrupt and continuing to build without necessarily needing to worry about, am I going to get that liquidity event, right? So it makes the jump from corporate to startup way more acceptable or way more palatable. And I think that that's kind of a human behavior change more so than, and I think that that's what we're seeing, right? Where people are angry about what happened with these bankruptcies. People are angry about how the world has evolved the last 2 years. I think even people were angry in 2008, but this is like 10 years later where we all know better in a way, right? And now I think the anger is a little bit different to a place where we're ready to change our behavior, right? We're ready to be more accountable for for our own well-being, and just taking a little bit more accountability for how we all act and the services that we rely on and how we interact with the financial levers in our lives, I think will lead to a much better structure for society.
Has anything fundamentally changed in your view about DeFi now, having been in it for all of these years, seeing all it was CEFI wipeouts of 2022, to be honest, but, the state of regulation, the aggressive stance by the United States government. I mean, do you still think that all this is as inevitable as you obviously once did when you chose to put your time and effort into building these things? I mean, what's the state of DeFi, the state of crypto in your mind in 2023?
Yeah, so I actually, and I know people are going to hate hearing this, but I think that DeFi is a great model for enterprise finance, or for kind of a new version of how existing processes and services are done, as opposed to doing something completely new, right? I love decentralized stablecoins. I think that there's a reason for them to exist. And there's a lot of reasons for these decentralized money markets to exist. However, I think the underlying technology, like the blockchain technology and the transparency and the rails around utilizing the DeFi processes for regular finance is what DeFi will become, right? Because that's as opposed to changing people's minds about go crypto or don't, just saying, okay, here's blockchain technology that mimics or enables you to get better access to lending, borrowing, other types of financial services, just because they're on chain, because it's all more simplified, right? It goes back to the original ideals of like where we were in 2017 with let's cut the fat out of the finance industry, right? I think that, I don't know, maybe this is why crypto is so cyclical, right? We go through these iterations and then we realize that the whole idea of this thing is to cut fat out of the layers where there's, basically inefficiencies due to how industry has grown in our country and how industry has grown with technology. Now we have better technologies that can make things more simple, that can, make things cheaper for people or get people better rates. And I think that we're seeing that with AI right now, right? With ChatGPT. And it's just another way that people are realizing that things can be done more efficiently, more cheaply, and then you free up a lot of, value that was muddled before. And I think that that's kind of the ideals that I look for in moving forward in DeFi, and just, kind of blockchain technologies as underpinning, financial services in the future.
So there's still hope, and the original premise is still there.
For sure. We always come back to square one.
Yeah.
Cypherpunks, right? Like, don't rely on the services that, you take for granted, because eventually they might not be there, or you can't always trust the people running them, right?
I think we've learned that from the banks of late, right?
The banks, the not banks, the lending companies, right?
Yeah, I guess we should actually be our own banks, but unbank ourselves, not with Celsius, obviously. Like, I mean, any final thoughts?
People should just be a little more conscious with the services that they rely on a day-to-day basis, right? If your cell phone provider went bankrupt tomorrow, right, or all cell phone providers went bankrupt, how would you call people? How would you get in touch, right? When you put your money in an ATM and it shows you a number in your checking account, unless it's in your hand, you're relying on someone else. So just being a little bit more conscious about the services that we rely on for everyday life, I think is, incredibly important, and will start to really affect and make people start to change their behavior.
Anything that I may have missed here before I let you go that you're dying to talk about? Or did we cover it all?
I think we covered it all, yeah.
Awesome, man. So listen, where can people find you, keep up with you after this conversation?
You can follow me on Twitter at 0xb1. I think my partner and I will be announcing something about this company that we're building in the next few months. And always happy to talk to anyone who thinks that they can help effectuate change in the world.
Awesome, man. Well, I appreciate it. I'm sorry for all that you've been through. It's been
Don't be
a rough few years for everybody, but you've borne the brunt of it in a worse manner than most.
Hey, we all got to do what we got to do.
Crazy story, man. Well, thank you for sharing.
Thank you. Talk soon.
That's dope.